A mom ran a tax business. Her son worked there too. Together, they quietly stole over $1 million directly from their own clients' refunds, and nobody noticed for years. Meet Iris Hondermann and her son Ivan Odiaga, both from Las Vegas, Nevada. Iris owned and operated a tax preparation business in Las Vegas. Her son Ivan worked for the business. So this wasn't some random scammer operating from a laptop in a parking lot. This was a real established tax business. A mom running the shop, her son handling returns. Clients walked through the door trusting them completely. That trust is exactly what they exploited. From approximately 2017 through 2021, Hondermann and Odiaga prepared tax returns for clients that included one or more false items, including business profits and losses, COVID-19 sick and family leave credits, and residential energy credits. Let's slow that down because there's a lot happening there. False business profits and losses. They were telling the IRS that clients either made more or lost more money in their business than they actually did. Why? To manipulate how much tax the client owed or how big their refund would be. COVID-19 sick and family leave credits. During the pandemic, the government created special tax credits to help people who couldn't work because of COVID. You could claim money back if you or a family member got sick and you lost income. Iris and Ivan were putting these credits on client returns for people who likely never qualified for them, all to pump up the refund number. Residential energy credits. This is a credit the government gives you when you make your home more energy efficient, like installing solar panels or new insulation. They were apparently adding these to returns for clients who made no such improvements. All of it invented. All of it on real clients' returns, without those clients knowing. Between 2017 and 2021, they prepared false tax returns seeking a total of more than $5 million in refunds that their clients were not entitled to receive. $5 million in fake refunds over 4 years. Here's where it gets darker. It wasn't just about inflating refunds to look good for clients. They went a step further. At times, they also diverted portions of client tax refunds without their clients' knowledge or consent. From 2017 through 2021, they diverted more than 1.1 million in false tax refunds to bank accounts one or both of them controlled. Read that again. They didn't just inflate the refunds. They actually took part of the money for themselves, and the client never saw it. Here's how that works in practice. When a tax refund is issued, it gets deposited into a bank account. The preparer controls where it goes. If the refund was supposed to be $4,000 and they inflated it to $5,500, they could route that extra $1,500 directly to their own account. The client receives something, thinks it looks about right, and never questions it. Over 4 years, they pocketed more than $1.1 million this way. And then there's the son's separate move. Odiaga filed approximately 279 tax returns, using the unique identifier of another tax preparer without permission, even though the IRS had issued multiple warning letters about this misuse. Every licensed tax preparer has a unique ID number. It's called a PTIN, a Preparer Tax Identification Number. It's like a digital signature on every return they file. Ivan was filing returns under someone else's ID number, essentially hiding behind another person's identity. The IRS sent him multiple warning letters. He kept doing it anyway. The IRS tracks patterns. When one preparer, or in this case a fake preparer ID, is linked to hundreds of returns, all showing the same types of inflated credits and deductions, that's a red flag. The COVID credits being claimed on large numbers of returns from a single office is exactly the type of thing that triggers an IRS investigation. Once agents started pulling returns and comparing them to what clients actually reported, the fake items stood out immediately. And the diverted refunds going to accounts controlled by Iris and Ivan, that's a paper trail that doesn't lie. What did they do with the money. Court documents confirm they routed over $1.1 million into bank accounts they personally controlled. Whether that money went to personal expenses, assets, or was otherwise spent is not fully detailed in public records. But over $5 million in false refunds was requested, and prosecutors say more than $1.1 million actually landed in their pockets. Hondermann and Odiaga both pleaded guilty to conspiring to defraud the United States. That means they admitted to it in court. No trial needed. They accepted responsibility. Both are scheduled to be sentenced on June 8, 2026. Each faces a maximum of 5 years in prison, along with possible supervised release, restitution, and financial penalties. Restitution means they'll likely be ordered to repay what was stolen. The exact final sentence will be decided by the judge. Clients came to them, trusting them with their social security numbers, their income, their personal lives, and they used that access to steal from them twice. Once from the government, once directly from the clients themselves. Here's what you need to walk away knowing. Ask for a copy of your completed return every single year. If your preparer hesitates, that's a red flag. Check the bank account listed for your refund deposit. Make sure it's your account, not someone else's routing number slipped in. And if your refund looks smaller than expected, or you get an IRS notice about a return you didn't recognize, don't ignore it. That could be the first sign someone redirected your money. The IRS doesn't forget. 4 years of fraud, 279 suspicious returns, 5 million in false claims, and it all ended with a guilty plea. The system catches up, it always does.